Hi everyone, this is Vinny. Hope you're doing well. Okay, I know what you're thinking. I told you a few days ago that I probably won't do another update until mid to latter part of August, and I'm already doing another video. I know. I don't know what to say. I miss you guys. No, I'm just playing. I really don't. Actually, I was thinking of you guys yesterday because the good folks at TradeSmart University have a really good deal right now that I think might interest a lot of you. And they've got 3 levels of their foundation of stocks and options course, and the first level, which is a 4-week course, is absolutely free. And you just register here, and registration's free, and there you go. You sign up. So they meet once every week, August 13th, Tuesday and Thursday, and I believe it is 9:30 p.m. Eastern Standard Time. The website is tradesmartu.com. It's the letter U, not YOU. But anyways, I'll leave the link in the description box below. I would highly recommend it. I actually took their Foundations of Stocks and Options Level 1 course, and I thought it was really good. For a beginner course, I think it's really good. I personally like to watch a lot of the trading webinars, doesn't matter whether it's beginner or advanced, just because it's a good refresher course. A lot of times, and I will definitely admit this, and I think that if you speak to any other genuine trader, that he or she will probably admit this as well, that when you make really good trades, especially if it's all in one row, you'll find that you'll probably cut corners later on, and you forget the basics sometimes. And so if I'm bored, I'll go ahead and watch any type of webinar. It doesn't matter whether it's beginner, advanced. I took this course. It was phenomenal. The guys behind it, really great. Very genuine, very authentic. I do highly recommend it. Even if you're an advanced trader, it doesn't really hurt to brush up on some of the basics. So just wanted to let you guys know about that. Also, this webinar might interest you as well. It is by Trade the Markets, and it is called Death of the Investor. You can either YouTube Death of the Investor, or you can click on the link in the description box below. And I think you'll like this webinar because it talks about the investor mentality of buy and hold and pray that something goes up, versus the trader mentality of there's no really any praying or hope, but there's really an objective perspective, and they don't really care whether it goes up or down because they see every move as an opportunity. And how that all ties together with the current economic situation that the world is in at the moment. They also discuss about the Federal Reserve, and if you're one of my subscribers, you will probably have some strong opinions on the Federal Reserve, and I don't blame you, I do as well. So they talk about the Federal Reserve in here. I think it's a really good webinar. And it is a little bit over an hour long, but hey, it's pretty decent. If you're bored, check it out. They do have some other ones on there as well. Before I forget, I would recommend you subscribe to them. I believe they come out with 2 or 3 updates a week. Now, it's not all necessarily on metals. Sometimes it's on the S&P 500, sometimes it's on the Dow, sometimes it's on certain stocks, but at least it's a good learning opportunity. And if you're a little bit open, then I think you'll really like it because they make sense. And again, they're really good group of guys. They're not out there to rip anybody off. They really are genuine. And if you feel as if I've built rapport with you, if you trust me as a person, then I would definitely at least give the level 1 a shot. It's a free course. It will get your feet wet, right? Now, I said in the past that trading's not for everyone, which it isn't, but at least you get to learn something that the TV doesn't teach you, yeah? Or that going to YouTube doesn't teach you. All those channels where they have these theories about what's going to happen to gold and the supply and death of the dollar or what have you. Instead of looking at theories, if you just look at the system that works, then maybe about 5 or 10 years, you might look at it and say, you know what, I might look into that a little bit more. You never know. So regardless if you want to trade or not anytime soon, at least it's planting seeds in you, just in case you want to maybe do that in the future. So I would say check level 1 out. Now, at the end of the webinar, they will probably bundle a few courses and give you a huge discount. I wouldn't jump the gun, and I wouldn't purchase them yet. If you're interested, I wouldn't purchase them yet. I would at least go through level 1. And I promise you, if you go through level 1, I'm sure you'll agree with me that they're very authentic, they're very genuine, and they are, and they're very intelligent. And I'm actually going to take the advanced courses. They've got an advanced course on fibs and advanced course on credit spreads. And for those traders out there, we all know that different traders have different strategies, different things that work for them. And so it doesn't hurt to take courses from others, or at least learn from others, even though you may be trading for many, many years, even though your ROI might be up, your equity curve might be up. We all know that professionals never stop learning. So I'm that type of guy. I'm always open to things, and I'm actually very excited to be signed up with them, and I'll be taking their courses very shortly. But level 1, I would definitely recommend it. Okay. Now, since I'm doing an update, you're probably thinking, okay, it would be really nice, Vinny, if you could do a gold update. So, okay, fine. I'll do a metals update real quick, just for you guys, just because I love you guys. Where are we right now? I did state that as we are in this uptrend, that if we have a large red candle like this, then be on the lookout. We may be headed to lower levels. We did have one, yeah, but there was no confirmation the next day. It was a good thing, which means that this uptrend, you see this blue purple line, is still intact. So on the last session on Friday, the sellers tried to breach this uptrend that started ever since July 8th, and they failed. Yeah. So what I'm seeing at the moment, and this is true until this trend breaks. If this trend breaks, then well, all bets are off, right? But so far, what I'm seeing is wave 1, a wave 2, a wave 3, a wave 4, which is corrective move, and then the wave 5. Now the wave 5 is not going to be as long as the wave 3, but it will at least bring us closer to the high 1300s and a possible 1400s. And that may also, it may be possible, I'm not saying it will, but as long as this uptrend is not broken, we may see 1416. What's so interesting about this level, not only is it close to these highs, okay, but if you look on the weekly chart, that's where the 21-day moving average is. Right now it's about 1417. So assuming this uptrend does not break, and if it just goes up and up and up and up, I'm not sure where exactly that 21-day moving average will be at that time. It might be 1415, 1414, but it would be around these areas. So that's what I'm looking for at the moment. I am looking for this to rip up to the upside. The trading day on the 29th is very important. It's important because if you recall on my last video, on the quick metals update video, I stated that the stochastics is there to alert traders as to whether a stock is overbought or oversold, and that at that particular time it was neither, and that it was embedded, it was locked in, it was above that green line, meaning it's not overbought. Even though this stock is going up, even though gold is going up, it's not overbought yet. But because of this candle, if on Monday, if we don't have momentum to the upside, which I think we will, but if we don't, then that stochastics will most likely go below the green line, and it will then trigger a possible overbought alert. So we do want to watch out for that. Now, even though it does, if it does break this trend line, then it's not called off per se, but I want to look to see whether it breaches 1288, and if it can stand, and so this is the critical support, and so if it can at least stay above it and not go below it, then we still have a good probability of it shooting to the upside. Okay, so that's my outlook so far. So we'll see what happens there, but if there's any type of resistance at this level, if it just cannot go up, I know there's a lot of arrows on here, I'm sorry. But if it can't go up, then obviously that means that the sellers are going to take more control. But I don't see this as being exhausted. People think, well, this is something bad. It really isn't. It's just a flag pattern. That's all it is. You're going up, you're consolidating, going up, consolidating, going up, consolidating. There's nothing wrong with that. Yeah, there's nothing wrong. Few red candles, it's not the end of the world. Now, this is the Ichimoku, for those who are aware. Lots of people in Asia use this. When it hits this cloud, you will have resistance. I am looking for it to probably hit 1359, assuming the trend line does not break, and it'll probably bounce a little bit back. And if all goes well, we're looking for it to go to the upside, high 1300s. If it passes that, 1400, and then it would be really nice if it touches these highs, 1416, 1417, give or take a few bucks. Alright, that's my update today. Hope you guys are having a fabulous weekend, and have any questions, let me know, and we'll see you on the next update. Thanks so much.